Hey everybody, it's Pete. Good morning. Welcome to today's episode of Stock Trading Pro. We have a ton of stuff to talk about today. Are there best stocks to buy as the market is getting hit with the Russia and Ukraine tensions mounting right now? I will tell you right now, the first thing we'll take a look at is the stock futures have bounced back pretty significantly overnight, especially over the last 4 or 5 hours. So I just want to start out today's call mentioning that, which is here. Pretty different picture from where it was when probably most of us went to bed last night. And we are now seeing a little bit of a rally. We're still down, but nothing even close to where we were last night. So that's pretty interesting. So now we're going to shift over into another big market that everybody watches, which is Bitcoin, and how that market is doing. It's actually been taking a hit quite a bit. Probably see this a little bit better on the daily charts now. Where we rallied, broke this downtrend pretty solidly. We were looking for this pause coming off of here to actually make a run up towards 52,000, and it has not. So there's a lot of volatility right now. We had our coaching call last night on the Order Flow Pro side of things, and there was a ton of questions about handling the volatility, whether or not short selling stocks right now is a good idea. And if you didn't happen to catch it last week, we discussed if you're not comfortable with short selling stocks, if you're not comfortable with buying puts because a lot of them expire and you could be right, but not necessarily make money on those calls. A lot of members of our community have shifted over into buying inverse ETFs as the market has been going down because a lot of people are just comfortable with watching stocks go up. So we have a lot to talk about. We have a pretty big list of stocks. We have a few sectors that I'm going to be looking at today. I want to share some ideas with you. I also like to hear what you're trading right now. So stick around. And actually, going to talk about a book. This book is, a lot of people are asking me right now, what would be the best book to handle trading the current market conditions, which is a lot less more obvious than it has been recently. What do you recommend? What do you suggest that I read right now to keep my sanity as an active trader and push through to the other side? A big part of our coaching call last night was about persistence. And this book is probably the biggest one that I would recommend everybody getting involved with. So stick around. I'll be back in just 1 second. Okay, so thank you for joining me here today, everybody, on this episode of Stock Trading Pro. We're going to look at the best stocks that I'm looking to buy right now. Some stock picks from last week, some stock picks for this week. Got a lot to talk about, but I want to start out first, obviously, saying everything we talk about is for educational purposes. It's up to you to make those final decisions. Last week, we had a few conversations about tackling this market and conviction levels in the market. Now, look, let's just say it. Let's be friends here. It's been a lot easier to be a day trader over the last 6 to 8 weeks than it has been to swing trade, unless you're swing trading on the short side. I want to make sure I say good morning to Min. Hey, Min, good morning. Thank you so much for being here. So what book is this, right? What book could I possibly recommend to help everybody deal with the stock market conditions, maintain your confidence in the current stock market conditions, and kind of maintain your conviction level in your ability? On last night's coaching call, we spent a lot of time. A question was asked about having doubt and losing your confidence and that kind of stuff. Now, here's the thing I want to bring up. If your trading strategy, if the way you buy and sell stocks has worked in the past, but right now you're finding it a little bit hard to be consistent, a little bit hard to see follow through. Maybe you've had to adjust your initial profit target to a little bit lower level to compensate for the fact that the market is just a little bit heavier. I want to give you a suggestion, which is what we talked about last night, is to maintain your confidence if your strategy works. So in other words, if you've been able to pull money out of the stock market, if you've been able to make the stock market making money using that strategy, maintain your confidence, because trading is going to be ups and downs. You have to remember, you hired yourself as a money manager, and you have to understand that there's going to be these kind of peaks and valleys. Just ask Kathy Wood right now. She's having a rough couple of months, and she's one of the best. She's had a long track record. So even if somebody like Kathy Wood is getting beat up a little bit, we have to work on maintaining the most important asset that we have, which is our confidence, really. There's no other way to put it. So what book is that, right? It is not the Bible. It's my Bible. It's actually, it is my personal Bible, which is this. Okay, if you have not bought Think and Grow Rich, if you have not heard of Napoleon Hill, this book has, if you don't know, I've been an entrepreneur since 1988, and I've gone through some amazing ups and downs and peaks and valleys. This book has done more for more people other than maybe stuff from Anthony Robbins in the recent last 25 or 30 years. Think and Grow Rich was written in 1937. Obviously, whether you believe the whole story about Andrew Carnegie and all that stuff, we could save that probably for a different conversation. But what I want to tell you, and the reason I'm bringing this up today, especially because of the way the market's trading right now, the secret behind Think and Grow Rich is that you hear about all of the famous people at the turn of the century and the famous things that they did. Thomas Edison and Andrew Carnegie and all those kind of people. Think and Grow Rich actually walks you through the struggles that they had to go through and the mindset that they had to go through to push through to the other side and believing in themselves no matter what. Now, we're not talking about the law of attraction or any of those kind of things. However, persistence and the ability to visualize where you want to go in spite of what's happening, and the ability to shake yourself off and see roadblocks and obstacles as stepping stones and lessons to improve. That's probably one of the biggest things that I think a lot of people really need right now is somebody who kind of has their back in the context of you're getting beat up right now, maybe, and maybe you're thinking about maybe I'm doing something wrong. Trust me when I tell you right now, this market is challenging, and it's going to challenge your resolve in whether or not you want to be a stock trader. And again, it doesn't matter if you're part-time or full-time, swing trading or day trading, this market is challenging. So what I want to challenge you with right now is this current market condition. And just to give everybody some context, if you happen to not be watching this video when we're filming the video, this is the market condition that we're in right now. Since the beginning of January, right around here, it's been anything less than obvious. As a matter of fact, it's mostly been bearish, right? So it's messing with a lot of people's minds. We're going to talk about buying stocks right now. We're going to get into the best ideas that I'm looking at, especially for this week. But I want to tell you this, and I want to challenge you on this, and you could take this to the bank. And I don't say stuff like that often because it's being recorded and it's out on YouTube. I can guarantee you this, and I learned this mostly here. Okay, my mom and dad taught me persistence and hard work and believing myself. But when you start to read this and you actually study this book, I can guarantee you this. Adversity will show you what you're made out of, and adversity will show you how badly you actually want something. Everybody understands how to celebrate the winning touchdown. It's people like you that will have setbacks, have roadblocks put in front of them. And that moment of decision when you're getting knocked around, life and the market, the stock market at this point, is showing you this is a test I'm going to put you through to see how much you want to get to the other side and have those rewards. So as your friend, as somebody who hangs out with you every day here on YouTube, I'm telling you, if you're working hard, push through any adversity that you have right now, because the market is going to challenge you. The market's going to make you doubt yourself. The market's going to make you say, are you sure you want to do this? And you have to be having in your mind right now and saying, okay, is that the best you can do? Is that what you think is going to make me stop? And you have to laugh at that adversity. Make sure you have discipline. Make sure you're adjusting your risk, all of that kind of stuff in a tougher market condition so that you are maintaining your account, maybe making some along the way as well in these tougher market conditions, maybe learning to short sell a little bit in the current market conditions, or maybe just being perfectly okay with being in cash. As Don Maxwell pointed out last night on our coaching call, you have to determine what kind of market conditions you want to trade. But I want to tell you this. There is a lot of opportunity across multiple asset classes right now, whether it's stocks, options, futures, Forex, crypto. There is opportunity right now. You just need to make sure that you have your mind in the right place that says, if I'm getting beat up, you have to take a step back. You have to make sure that what you're doing works. And if it's not working right now, ask yourself why, and then make adjustments to start turning those tougher days into small wins, and then those small wins into bigger wins. If you are getting beat up in the market right now, there's nothing wrong with scaling your position size back. There's nothing wrong with maybe having tighter profit targets. And then quite honestly, there's nothing wrong with trading those inverse ETFs as well. So again, what I mean by those inverse ETFs, we'll just take a quick look at that, is SQQQ is an example of one of them. So the inverse ETFs go up when the market goes down. So if we take a look at something that we look at pretty much every day, you know that we spent some time on FinViz, and this map here is one of the things that we look at every day. And we're actually going to take a look at this map in a second. But you can see over here the inverse ETFs, the ETFs. This group over here, the inverse ETFs, that you'll notice that as the major indices are going down, the inverse ETFs go up. So this is an alternative if you don't understand options buying and you don't want to buy puts because you don't understand time to expiration and all that kind of stuff. If you're not comfortable with short selling stocks, which I do every day, I love short selling stocks, especially on the day trading side of things. Looking at these inverse ETFs are a way to still be a buyer, even though the market's going down, the inverse ETFs go up. So I'm going to put this up on the screen one more time. You can actually take a snapshot of that, and you can see this, the list over here, okay? But the big thing to keep in mind is here, you need to pick the kind of market that you are comfortable with that matches your strategy. I want to say one of the biggest mistakes that stock traders make is they try and force the market into what they want to do when that's completely wrong. What you need to do is first develop an edge, which means something that happens most of the time. So our edge is order flow and tape reading, right? Then when you scan for ideas, and we're going to get into all the stock picks right now, you need to only scan for ideas that match your edge instead of everything that moves in the market. It's very important that you scan first, then only go and trade those ideas. We actually had a comment the other day from somebody, which, of course, love your feedback. I love everything that we talk about here. And if you have any comments, if you happen to be watching this on a replay after the video, you can leave your comments below the video here. Somebody had mentioned that they don't like to do game planning and that it doesn't make sense to look for ideas until after the market opens. Now, you have to put that in context because the way that we trade, the way that I teach everybody to trade is that it's very important to know what you plan to do before the market opens. And then after the market opens, you're simply looking for entries and then you manage those trades. Looking for new ideas after the market opens can be a little challenging because it will have less conviction in those ideas because you're trading just that most recent price action. And quite honestly, that conviction is how we ultimately learn how to hold good trades longer. So I want to walk you through some basic mindset, but more really basic math. If you are okay with having an edge, and you understand that that edge means that most of the time it's going to unfold the way you expect, that also means sometimes it's not. So the sometimes it's not means that we have to manage the downside and take losses appropriately, right? So when you understand that and you're good at taking losses like we teach you, which is a business expense, then the next thing you need to learn is how to make more on your winning trades. So in order to make more on your winning trades, you need to have conviction to hold through the blips, right? You have the big push up and it starts to pull back and you panic a little bit and you're like, oh, I need to get out of this thing right away. In the context of holding trades longer, you need to have a little more conviction. So there's two sides to that equation. Wait for the market to open and find ideas versus plan and look for stocks that meet your criteria. I think it's easier that way. I've proven over the years to myself that it's easier that way. So I want to challenge you. Map out what you think is the best way for you to find ideas and stop trying to look for everything. Focus on your niche. Focus on the type of picks you want. It could be long, it could be short, it could be day trading, it could be swing trading. It could be something as simple as I only buy stocks above the 20-period moving average or something like that. Whatever it is, make sure that you become the master of that strategy and leave everything else alone. You would think that you're going to be decreasing your opportunities by focusing, but you actually increase your conviction, which helps you make more money because you have that focus. So now I'm going to walk our way over into some of the ideas that I'm looking at and looking to trade this week and specifically today. So obviously we just talked about that, but one of the first ones I want to talk about, first we got to get into the stories. Dow drops and oil spikes. So this is an article actually from this morning, about an hour ago. What else is happening in the stock market today? So working our way over first into some of the oil ideas that I'm looking to trade today. I'm looking first at Oxy. And again, we get a lot of questions. I want to be clear about this. these YouTube videos, the conversations that we have here on YouTube, it's what I'm trying to do is point you in the direction of how you can identify some of the best ideas, so then you can adapt these to yourself and find the best entries that work for you. So this week, we're going to be focusing on energy stocks. We're going to maybe even be focusing on some technology stocks, depending on how they unfold. And we're going to work our way through, have the financial stocks frustrated you like a lot of people, where we've been thinking they're going to be spiking up with the spiking up with interest rates. And so far they haven't. I'm going to be honest with you, myself, David Farris, a couple of other people in our community, in the Discord community, have been a little, what the heck is going on with these financial stocks? Why aren't they exploding to the upside with interest rates just a few weeks away from apparently being raised? They should be going up, and they're not. So a couple of people here talked recently about the 1980s and how banks and interest rates and financial stocks exploded. A lot of people are comparing right now inflation and the CPI and interest rates and potential war, unfortunately, what's going on right now, to the late 1970s and early 1980s. And it's a pretty interesting comparison for those of us of a certain age who recognize that. Now, there was a lot of volatility, but we keep shifting into different sectors. So now I want to walk you through the sectors, because the sector rotation is not super obvious right now. This is where we are as far as the sectors. And you can even see just about a week and a half ago, most of these were lit up green on the week, and even a few of them across the board from the day, the month, and the week. So we're talking about right now, over the last 5 days, consumer defensive stocks. You might know them sometimes as consumer staples, stuff like Pepsi and Coke and those kind of things. The strongest of the week last week wasn't even up by 1%. Basic materials we've been talking about, and consumer cyclical we've been talking about, right? So we're going to work our way through this list. But first, I want to give you a chance. You could take a snapshot of this. So this list I'm about to give you now, we just went from the market, which we looked at the S&P 500. We looked at Bitcoin. We know tech has been a little bit weak. So that's the bottom of that stock market power pyramid. Now we're working our way up another level into the sectors. And the sectors, if you want to take a snapshot of this, the sectors are not screamingly obvious either, which is this one. Okay. I am, however, focusing here, even though it's at the bottom of the list, simply because a lot of them are still in much bigger uptrends, bullish order flow over time, plus the geopolitical stories that we have coming into today, which is obviously this. So the threat, this is still a threat, depending on where you're reading and that kind of stuff. We don't want to get into where you're getting your news from right now, but it is happening. It is a story that's in the news every day, and oil prices are approaching $100. So we have this as the big story. We have where it could be affected. And right now for this week, I'm looking mostly at energy stocks. Okay, so I want to get across on that. So I'm looking at Oxy. I'm looking at DVN. I want to give you a list of ideas to be having into the week. SLB and APA. Some of the more popular ones. Again, you can see how we're drawing these lines and we're working the charts. Something as simple in APA is, we get a lot of people asking about entry prices. Just draw some basic lines. And even if you have to drop it down on a little bit lower time frame, you can see here in APA, we need to get above 32.50. And we're actually above that price right now. Some of the more popular ones that have been on the radar for a while, Chevron and CVX, also in my list of stocks to trade. So starting out the week, based on how things transpired over the last weekend, the long weekend, the news cycle that's going on right now, energy stocks are at the top of my list heading into today being Tuesday. So it's a 4-day week. Another stock that actually we don't talk about that much, at least I don't, is one that is the app launched yesterday. We're going to keep politics out of this. We're just talking about a stock that could potentially be volatile and tradable this week to offer some trading opportunities, is this guy. Now, we want to talk about the actual trading of this stock. And you can see actually over here, it's up 20%. It's up at $100. So it's all the way, way up here. So it's right around that area, give or take $1, right? So we want to talk about how to trade this. DWAC, we know, is coming out with that social media app, or at least that's been the story behind it. So if you haven't traded DWAC and any of these other SPAC type companies, they are very, very hit or miss. They trade a little bit less liquidity. The spread between the bid and the ask, especially if you're on the day trading side of things, can get wide. So in other words, right now it's $100.60 where it's trading. The bid and the ask is something you need to pay attention to when you're buying stock, that if you pay the spread between the bid and the ask, you could be down a decent amount of money as soon as you buy that stock. So you need to be aware of the liquidity. You need to be aware of where you're buying the stock relative to the bid-ask spread. So I want to be clear about that. Okay, we're going to let's keep politics out of this. I'm just talking about this from a stock that has volatility, has news, and has a reason that we could trade it. So Michael is absolutely 100%. That's why I'm bringing up all of this disclaimer, for lack of a better way of putting it, because we have a lot of people that are looking at the stock, a lot of people that want to trade it. I'm getting a lot of feedback on it. Should it be in your list? Could it be in your list? Now, obviously, all of us have different risk tolerance. We can handle different types of volatility. Sava, S-A-V-A, is another stock that meets this similar type of criteria, even though it's not a SPAC, but you can see the volatility in the stock when it is in play. So keeping in mind this stock right now, we're going to use the same type of criteria that we've been using at some of these other stocks that have been having big gaps, for lack of a better way to put it. I want to shift over to a stock that we keep waiting for a spot to buy that has not given us a spot to buy, but we helped you map it out. So I want to give you a template, a roadmap for buying these stocks when they have these big moves, regardless of the reason. If there's volatility, if there's a catalyst, if there's a reason, we could look at them. So I want to compare it to something that had earnings recently, which is this one right here. So when this stock came out, the earnings came out over here, and right there, that's the level that we're talking everybody through, is understanding that when these stocks have these big gaps, a lot of people are convinced it's going to keep going. And that's great. You need that kind of conviction to be looking for a stock to buy, and you're looking for it to follow through. But, and here's the thing, but what is your plan if it does not follow through? That's what you need to have in case. So again, professionals manage the downside. Amateurs only look at the upside. And if you're only looking at the upside and that thing turns around, you now are caught frozen, like a lot of people do, and you can't make a decision because you never planned for the stock to move against you. So I'm going to look at two stocks that reported earnings and did not follow through over time, and you should have either taken a small profit or a flat. So the language we're giving you now, a flat actually means two things as a trader. A flat means you got in and out at basically the same price, or you could tell people that you're flat, that you don't have any open position. So the terminology as an active trader, flat, means those two things. So looking at TSN, when this came out, we said be very clear that that's where it's gapping from on earnings. And as long as it's still above that price, you're going to lean on that as your line in the sand. And you can see it eventually worked its way down and did not follow through. So at worst case scenario, this turned into a flat, small profit, or a small loss. So we're using this stock as well as the same example, where this is when earnings came out. We had this giant gap. I've got a bunch of people out here in our community on YouTube, as well as in our Discord community, saying, let's get in there, let's buy this stock. And I'm like, yeah, I'm with you, but let's make sure that we're reading the tape and we're getting involved, building a position, and know where we need to pull the plug on that trade if it happens to not be following through. So I'm working all the way through, so you have a mental map for what we're looking at in DWAC this week if you choose to trade it. So really, this is what happened in Google. So looking at DWAC, we now know that this is where it's right around 101 right now, give or take, depending on where it is by the time the market opens. That's the line in the sand for me personally for this week going forward. So I want to give you the map that I'm looking at to hang on to some of these stocks that are having bigger moves either today or opening strong this week, maybe even have earnings. Macy's came out with earnings, Home Depot came out with earnings. So whether it's DWAC, or I'm going to give you a couple of other stocks. So DWAC or Home Depot, which actually is now down after earnings. So that's not going to be one that I'm going to be looking to buy. Or Macy's, which is not, doesn't really have that much order flow, but it's up 7% at this moment. So what I want to walk you through, let's say Macy's right now, 27.72. So right there, somewhere in that area, right? So if I happen to be looking at Macy's this week and I'm looking to capture the news, I'm looking to capture the volatility in Macy's, and I'm looking for a simple Monday through Friday type swing trade where it's very defined. I'm looking for the open on Monday. I'm looking for it to stay at that level like we just showed you. That opening price now in Macy's is the area that I'm going to be leaning on, as that shows me order flow is there and I got follow through. That's the big thing. So as long as it stays above that level, these are the easier ways to be reading the tape, to be reading order flow, and set yourself up with some ideas heading into Monday through Friday. That Monday through Friday swing trade is probably the easiest swing trade that you could make. It's the easiest structured one, but you first need to understand why you expect that stock to follow through in the first place. So I just want to keep working our way through to give you some ideas, because this is going to be a challenging week. The biggest thing you need to have this week in your mind, as well as in your actual game plan, is where am I being proved right? And I hate to use the word right, but where is the idea validated? Where am I getting feedback from based on these bigger gaps up or gaps down? How do I know I'm measuring it changed or it's still valid? I'm telling you right now, based on the feedback I'm getting in our Discord community, based on the feedback that I'm getting here, the single biggest question that people have right now is, how do I know when it changed? And what I'm walking you through now is simply knowing from one Monday through Friday how to know if your idea is still valid. And probably the easiest, simplest game plan on the planet is Monday's opening price. So what I want to challenge you to do now, everybody here is obviously trading different stocks. We all have our different ideas. I want to challenge you. Obviously, this is the Tuesday video. I'm saying Monday's opening price, even though today's Tuesday. I keep calling today Monday. As this week progresses, start to jot down the stocks that you wanted to buy coming into the week. Start to track them where they are the first print of the week, and then see how much easier that trade is through the week. I think you'll be surprised that you're making trading a little bit more difficult than it needs to be. You're going to dial back all those confusing indicators that you use and just get right back to what matters, which is price and volume. Okay. So now I'm going to work over into a couple of other ideas that I have on my radar this week. We talked about DWAC. We talked about the spread. So make sure you're paying attention to that today. Macy's has a little bit of a bullish sentiment this morning. Home Depot earnings coming out. You can actually see the stock is now down at 340 and change. So if we actually work our way through here, this is the last place that buyers did something significant in Home Depot. Maybe you can make a case for here because this is where the breakout was, but I'm actually looking down here. So I'm actually, at this particular moment, I'm actually looking to be a short seller of Home Depot because I'm okay with short selling stocks. And that little bit of a window, looking it down to 324 and change. Let's see. Let's see. Faith. Hey, Faith, how's it going? Good morning. What about LNG, also energy stocks? But we'll be shipping if Russian nat gas gets cut off. Yeah, that's a big conversation about natural gas right now. So let's actually take a look. Let's just look at it without looking at all the financials and everything like that. LNG meets the criteria as well. Let me take a look at the volume. I just want to make sure the volume is what I would normally trade. Over 1 million, that's okay for a swing trade. Now, you know what's interesting here is paying attention to the melted candles. We have 4 days of almost opening and closing in the same exact spot. So there really has not been that much volatility. So I actually want to work out on the weekly chart right now and see how this one looks. I'm okay with that. Faith, I'm okay with that. If this actually catches a bid, I'm okay with that. It looks like it needs to get above the most recent price action, 116 to 118. Looks like 118 seems to be the real level. And actually, this is kind of an advanced thing, but really kind of a common sense thing. Have you ever read technical analysis books where you're like, okay, it says all the way up there where the very top was, just put your resistance there. That's the line, right? No, that's not the right resistance. Our job as traders, our job as somebody who's looking to manage money and put our money on the line, you have to be asking yourself, what price is the market struggling to get through? And I'm telling you right now, it's not always just that high print. I'm going to prove that to you right now. So if we're watching LNG right now, and the basic technical analysis books would be like, okay, up there, that's the level that this stock is having a hard time with, and that's where your resistance would be. But let's do a little bit of a deeper dive. Look at this price right here. This is the price right there. Let's just say it's 118 just for argument's sake. It got up there and failed, got up, failed again, got up there and couldn't get through there again. So we're talking about somewhere right around the 118 level. That's the price that me as an active advanced trader be saying, okay, that's the real price we need to get through. So now, based on Faith's comment, do we buy today's high, which today is a bullish U-turn, or do we wait to get through 118? You can see it's actually already trading at 121. So putting all of that in the equation, it's going to open up, looks like right around 121. And we know 118 is the level that buyers have been having a hard time pushing through. So if I'm looking to get long, I'd probably be getting long on a stop limit order. So again, super important in this market condition right now to understand your order types, especially if you're an active swing trader who has to go to your job after the market opens. That volatility spiking all over the place right now. It's a smart trade right now to put in a stop limit order, not a smart a stop market order. If you're going to buy with a market order right now, you just better prepare to be getting any crazy price. You can get some really bad fills with the news and the volatility on the open. So if you have a stop limit order, so the stop order at 121, but the limit price, let's say at 121.25, you can't get worse than 121.25. And if the thing explodes, you're not going to get a fill around 123 and get a really bad fill. So this is kind of breaking down this trade right now using a stop limit order above 121 with a limit at 121.25 is how I'd attack it. And we know 118 is the spot that we had to get through. So my stop in this particular instance would be somewhere just below 118. So this would be roughly just over a $3.5 risk on this trade. And then we need to go in and get the right position size and set the initial profit target. So that's kind of how I'd be looking at things. I want to give you a couple of other stocks to buy today because these are some ones that have been in the list for a while. We didn't mention Hess. Hess is continuing to pause. So Hess we have at a 96 level that you can see that we drew. That's going to be a big one. LVS, actually, interestingly, a push and a pause, a push and a pause, a push and a pause. And look at last week compared to it. 1, 2, 3, 4, 5. Talking about relative strength, kind of like hiding under the radar. LVS, even though it's down a little bit this morning, had 5 days last week where it closed above the open. So that meant that somebody was holding the bid there. Wherever it opened, they weren't letting it go below that opening price. That's something to keep an eye on. So LVS is going to be in my game plan this week and specifically today. Some other ones that I'm looking at heading into today, American Express continues to hold the bid near this breakout level. So that one's hanging in there pretty good. Shifting over into a different sector, healthcare, ABBV, a push and a pause, a push and a pause, a push and a pause. Looking for this one to have a little bit of another rally to the upside as well. We have been watching NUE, so hopefully you've been watching this one with us for the last, month or so. So we said that it's hanging out between 122 and 124, still stuck in that window. We need to see it get out of that window, but it's on the list every day. And one other stock that has been something that I've been looking to buy today coming into the day, a little bit off the reservation, something I haven't really watched that much is MetLife. And you can see this is actually hanging on to the bid as well. So we're shifting away from tech stocks right now with the way interest rates are going to be getting impacted a little bit more. I'm looking a little bit more at energy stocks heading into the week. Look, the news cycle can change by this afternoon. Who knows? But that's my game plan heading into the week. So right now I'm looking to be a buyer this week as of right now in some of these energy stocks. Healthcare is kind of on both sides of the market. Moderna and Moderna has not been a buyable opportunity with NVAX. They've really been in short sale opportunity for a while. So I've really been only day trading them. We get a bunch of questions about those as well. mRNA and NVAX. So really not much to do there unless you understand short selling and you're okay with being on the short side of things. One other stock that I want to point out, which has actually been holding the bid pretty well here over the last few weeks too, is EXPE, opening a little bit lower this morning, but also in my buying. And one last one that I have not called out that much, GoDaddy, actually, since earnings, you can see it had this bullish gap and now it's paused for like 4 or 5 days. Above 86 is really the level it needs to get through. So I'm looking at maybe a two-step trade here where the first piece would be above 86 and then somewhere up above 90 would be the next trade if we break through that. The one thing, again, I want to say this as a friend, if you're looking to buy stocks, whether it's for a living or whether it's kind of a side hustle that you have, you need to do that little bit of extra game planning because this market is making you pay if you're lazy. And look, I'm not telling you anything you don't know right now. but the way that the market is trading, the way the stock market is going back and forth, the way the stock market news cycle is going pretty much every other day between Europe, the pandemic, interest rates, the Fed, earnings, all the stuff that's going on right now. If I could give you any suggestion to help up level your trading right now, put it on your calendar. You probably have one of these, right? Everybody's got a smartphone these days. Set a certain time every day that you are available to spend at least 30 minutes going over the market, the sectors, the industry groups, and then make some stock picks, because that little bit of extra work that you do is going to give you the conviction in your ideas to get out if it's not working out in a heartbeat, and to hang on to those trades because you did the work and you're getting follow through. Remember, if you have a strategy that works and you happen to be taking your lumps a little right now, that does not mean your strategy is no longer valid. It means that the market changed and you just have to adapt how you're applying your strategy in the current market conditions. All right. I have to head out of here. I got to get ready for the game plan. Thank you so much for joining me here, to everybody. If you got some value out of this video, which I hope you did, we covered a lot of stuff today. Do me a favor, smash that like button, hit subscribe, and make sure you'll get updates. Faith, thank you so much for your question today. And we'll be back soon, probably later today. We might actually do a day trading update live, so look for an update on that too. So make sure you hit that notification. Thanks so much, everybody. I'll speak to you soon.